All right, happy Monday. Welcome to the Hit It Money Daily Update. Sorry, real late today, guys. Been real busy with some other stuff, but awesome day today. Okay, listen up. If you guys are not putting on premium, putting on positions, start putting them on. But what's good about IV rank at 100? You can even go farther out than one standard deviation. Okay, so let me show you what I'm talking about real quick. Let me load up my chart here. I think it's this one, the real clean one. All right. Okay. So here we go. Um, Here's what happened today. A huge drop today, right? Over 1%, 1.5% in one day. We're closed at 187.40 down here. We breached this. We breached this. We breached this. And we are about this bold white line is a 233-day moving average. If we break below here, guys, woo, it's gonna go south, and it could go south hard. There's really nothing stopping it from there. Let me show you what I mean. Anyway, IV rank right here. See that? 100%. OBV cross way below. Okay. Slow stochastic all the way down here. All right. And so let me show you what could happen if this. Right now this is the only thing. The 233 moving day average is at about. Hold on. Let me see if it should show me. I don't know why it's not showing it to me here. One 180, 188.29. Okay, so that's a 233-day moving average. This thing goes below that. It could go a lot further here. Let me expand this out to a year. Wait, what am I on here? 1 year daily, I think, right? Okay, 1 year. Yeah, 1 year daily. Okay, so look how long it's been. Oh, you know what? Let's go further out. How do I go further out here? 2 year daily. Okay, so let's go. Let's add this. Let's go 3 year daily. Customize this. Let's go to add time frame. Let's go to what time? I'm sorry. Let's go to 5 year daily. Okay, select. Okay, okay. So let's go to the 5 year daily. Here we go. Okay, this is 5 years. Okay, the last time the SPY broke below this 233-day moving average was, oh my God, this is back. This is, I gotta fix this real quick. Study price access fit high low. Okay, all right. Anyway, so the last time this happened was, geez, what is this? July of, oh my God, what is this? July 2010, July 14, 2010. Okay, it was bouncing up and down. 2010. Then around here, I'll zoom in. Yeah, it was bouncing up and down. See these yellow arrows? Whenever the 13-day moving average crossed below the white line, you're gonna get this big yellow arrow. Whenever it crossed above, there's this green arrow. It's just bouncing up and down. All right. And this arrow right here is December 22nd, 2011. All right. I'm gonna expand out 5 years. This is 2011. You can see the date over here in this little box. Whew. So it always bounced and touched up, bounced and touched up, bounced and touched up. Okay, but it could be, now look what happens. Here's where we are, all over here. If this thing breaks, I'll zoom in real quick. Look at where we are. This is cray cray. All right, look. If this bounces below this, I mean, look, there's nothing below it really to stop it. You know what I mean? I mean, this is the bears loving it, and this is what could scare a lot of normal mom and pop investors. Okay, what I like is implied volatility at 100. So even when how can I do this? Okay, so IV rank we could only calculate since March of 2013. It only goes back to here. But look how long it stayed up. Every time it spiked up to 100. Never got to 100. The last time I got to 100 was right here. This is February 2014. And it lasted a day. Okay, so you guys want to put on positions because you want to play this vol collapse. All right, in the with IV rank. Now let's look what's happening in the ES. This is after hours. So I'm going to change this back to, I'll just go year to date, or do I have year to date on here? Shoot, I should put that on. Add time frame. I'm going to go I'm going to put over here. Wait, where is it? Scroll up. Holy crap, why is it so, here we go. Year, what? Here. year to date, daily. Okay. Anyway, so when you do that, you have all these choices when you click up here. So let's go to 1 year chart, 52-week chart, rolling 12 months. All right, so look at this. Okay, now this is the ES. So let me zoom in real quick. This is today's tick, 1013. You can see at the bottom of your screen. This is after hours. So after hours, it's up like 0.5%. I mean, it's, I'm looking, we'll see what happens. Okay, but um, the only way this is going to bounce up is if an IB rank drops, is if this pops up. So we're going to see. Tomorrow's going to be exciting. So let me show you real quick what's going on. And I want you to learn from my trades. I mean, that's what the whole point of this project is, right? So let me show you what's going on. Let me go to Dole real quick. Here's my positions. Okay. So let me tell you what I'm going to do. I don't know if it's right. I'm just telling you what I'm going to do. I have see this 190 put. I'm in the money. I'm $3 behind, right? But I collected $2 on it, so I'm still on the dance floor. That's why I'm not going to do anything. Why? Um, the reason why I'm not moving it is I have time on my side. I want I want the market to recover and finish right above here. I think, in my opinion, I think that'll happen. I have other positions getting tested. Look, this 185, but look where we are. I'm still on the dance floor, and look, these don't expire till end of November. These are November expiration. Okay, oh, I'm sorry. This is a one. What is this? My 185. Jeez, I forgot what I got here. It expires October. Okay, so that's in a few. I don't know how many more days that is. I'll go look. About 20, 20 odd more days. Look at this position. This is November. See, so I have time. So what I'm going to do is, instead of worrying about that, because it's a defined risk trade, honestly, I'm just going to worry about putting on more positions. And what sucks is I was so busy today, I didn't even and the market didn't tank till the end anyway, so I didn't really have time to put on more positions. So let me show you real quick what we can do. I'm going to go to choose strategy, of course, go to strangle. I'll walk you through the exercise. All right, go to this 45 days, 170 deviation. Now this is a golden gecko, 170 deviation away. All right, hey, how come it's on a strangle? Let's see how much we can collect on a strangle. Okay, so not a golden gecko. As you can see here, we can collect $1.79. Then you go to thinkorswim, you open up SPY on your chart here. Okay, go to the trade page. See this tab up here? Go to your trade page. Open up the time frame you're looking at. So we're looking at the November time frame right here. So I'm going to expand that, and you go move your mouse across. You see this number? That's the expected move till the expiration in 39 days. So you take that number, $11.61.7, and you multiply that by 617. Multiply that by 198, and your answer should be how much you should be to collect 20% of the expected move. Okay, it should be $2.30. We're not quite getting that, as you can see. Okay, so but at 100% IV rank, you have no worries. Okay, so here's what you do. On any other ETF, you want to look to collect at least that. The reason why I'm not worried is we got such high IV rank that gives us our edge. So anyway, go back to choose strategy, go to Iron Condor, and here are your default settings for a golden gecko. Okay. Now with IV rank this high, if you're worried, you can skew it to the downside, or you can go even further out of the money. Karen goes to about 90 to 95% OTM, and I'll show you what I mean. So Dole says go. Click on that, and let me zoom out a little bit. So here's what this looks like. Okay, oh, whoops, too much. Okay, look, I can collect a nice 62 cents, and it's still 70% chance of probability. Now look where my puts are. Okay, I don't have anything at 173. You see that? This is that. I don't have anything there. All my positions are up here. And look at my call spread. So look, I can get. Look at the. Let me click on this leg button. You can see you're probably. I have an 84 chance of being right here and an 85 chance of being right here. 68% chance of closing in the middle, and I'm only tying up $438 of capital. That's almost a 15% return on your money there. Okay, because why 10% of this is $43. This is max profit. Even if you only collect half of that, which is $31, you're still making, a good return on your money. Okay, so if you want to make more, put on more contracts, or hold it longer, or move these out. If you move these out, though, you're going to have a less return on capital. Let me show you why. Okay, so a true golden gecko, these are only $5 wide apart. Okay, see right here, 5, The dollar amount from here to here is only $5. Look, 168 and 170. The strikes are $5 apart. 203, 208. That's what this $5, this 5 means over here. Okay. Yeah, is that right? Okay. Yeah, somehow it just moved over. Anyway, so these are $5. If you want to move them to a true golden gecko, watch. You move these out here to this 2 standard deviation line. Whoops. Close to it anyway. Okay, see that? See this light blue line right here? That's the 2 standard deviation line. Okay, I'm moving real close. So now I can collect $1.32, and here's my return on capital, $156. So not quite 10%. Okay, but you make more money, of course, right? And but your risk pretty much stays the same. Well, it gets a little bit less, but anyway. Okay, so I'm going real fast because I want to run out of time here. So this is one thing you can do. Now, here's the golden gecko, right? Because you want this around less than at least 2% or less than 2%. So I can even move this out like this. Perfect. Hold on. Okay, I can like $1.17, right? Because I want these to be cheap. See this? I have to pay 67 cents. I could move this out even further. See that? Look, now I only pay 25 cents. See how much more I can collect? As long as there's no teardrops. See, I want to make sure I can see. This is perfect. Look, I collect $1.66 now. I only have to pay 14 cents for these. There's no teardrops. My risk is a lot more because now I'm risking a lot more. See? So as you can see, the further you put out your biopsies, the more you go to a naked strangle, like Karen does. Which is why the golden gecko was meant to be, right around this 2 standard deviation line to preserve your capital. And reduce your buying power. Okay? See, look at the difference. All right. Now, if you want to be extra careful, what you can do is you can move out wider. Watch this. See the width? Move it out. Move it out to let's say move it out to 90. So look, you can still collect a buck, but you have a 90% chance of being right. See that? And then you move your. Can I zoom in a little bit? Oh, you can't see if I do that. Okay. And you're increasing your risk, but you're increasing your probability of profit too by 13% almost. Okay, you can also bring these in a little bit. Look, if I bring this back in here to where I was earlier, look, to the 2 standard deviation line, 2%, 2%, 2 standard deviation line, look. I'm only collecting 65 cents, but I still have a higher probability of profit. So you might want to hold this to expiration. I try to collect at least 70 cents though. Okay, so you might want to move these out so you can collect 70 cents. So that's one of the things you can do with such a high IV rank. Okay, let me look at something real quick though. I might try something. So I might put a couple of positions on just to play. I'm definitely going to put on one of these golden geckos. Okay. I'm also going to, let me check out something real quick. I got a couple minutes, right? Studies, go to add a study, all studies, go to ADX. Okay. So usually last time it spiked up to here, it didn't go past the average directional cross index went to highs of about 31, I think, right? 31, 32. Right now we're at 26. So it could go away when it turns over like this. That's when the market usually changes direction. See right here? See how this dropped back down and see how the market started to go back up. Same thing right, over here. Okay, drop down. This drop turned over and this market starts to go up. Every time that happened, it was right around 30. Okay, so we're not there yet, which is what kind of freaks me out a little bit because the market could still go down. But hey, I want to grab that premium. So I'm thinking it could still happen. I mean, this is not quite there. This is at 27. This was at 26. But again, the drop wasn't nearly as deep, right? Down here, it was, over here, it was on here, and it still turned over. So anyway, we got to see. Once this starts turning over, and the only way that'll happen is the market starts, if the market shoots up tomorrow. If the market shoots up strong tomorrow, in the ES or SPY, look for this to turn down, and then you'll see it come back. I don't know how far though. All right. So either way, I want to start selling some premium. And I'm going to put it on a lot heavier tomorrow. Why? Because 100% IV rank. So what you could do is, I don't know what your buying power is, but you could do more contracts. You know what I mean? If you want to go 90% of the money, you know what I mean, and bring them 5 apart. So what do you mean here? Watch what I mean. Go like this. Go to iron corner. Keep it at 5, right? 5 wide. Then move your strikes out. Let's say you're worried about a big move. Get it to about 90%. Okay, I can still collect 43 cents, right? I'm only risking 457, right? But you could put